So go ahead and like and comment, because I know this is going to be a video that you were looking for, that's going to explain in the most simple way on how this industry works when you're talking about life insurance and how you actually get paid, okay? So I'm going to pretty much break this thing down in the easiest way that I personally know how. Now, I haven't been exposed to every single compensation plan or anything like that, but I'm pretty sure that this is pretty much spot on what you're actually looking for, okay? Now, when you're in a situation to where you're getting into the insurance industry, you have two different sides, right? You got the non-captive and you got the captive agencies, okay? Specifically, I have no idea how the captive agencies pay out. Some of them, now there are some agencies they pay out exactly how I'm about to explain, but I'm gonna pretty much focus exactly on the non-captive agencies when you're considered a broker, okay? On how these companies pay. Now, if you are captive, this may be a little bit different, but I'm praying that this will be a benefit for you, okay? So if you're talking about how insurance companies pay, what they do is they are usually, now some companies, they do it a little bit different. They usually advance you, okay? So advance. So what is a advance? An advance is where these insurance companies, okay, what they will do is they will give you a certain amount of money, okay? Usually about 75% of 12 months of whatever that person paid up front. And throughout the months, you're necessarily considered in debt, okay? You could necessarily be charged back throughout that time frame, but you want that person to pay on a continuous basis. So what does that necessarily mean? That means, let's say for example, I have a policy, okay? Well, first starting off, you should be at a compensation rate, okay? So your compensation rate, okay, your compensation percentage, sometimes it can be 55%, it can be 65%, 75%, 85%, 95%, 100, 105, right? It can continuously go on. I've only seen it go up to about 100 and I've seen it go up to about 145%, right? That's the highest that I've seen, okay? So that means that you're getting a percentage, okay? On this is the percentage that you're getting on every policy that you're getting, okay? That you're actually writing, right? Or your organization is writing. So what happens is, let's say for example, I have a policy and that policy costs $100 every single month, okay? It costs $100 every single month. And right now, my rate, right, my percentage rate is 75%. So this is how this works. They're going to advance you in a situation of by 12 months, okay? They're going to advance you in a situation of about 12 months. So that means that your full commissions on this one policy, if you sell a $100 a month policy, your full commissions is going to be $1,200. $1,200, okay? Your full commissions is $1,200. Now, what you want to do is you want to times that by whatever percentage rate that you're at, which is 75%. So let's go ahead and let's do that real quick. So let's say 1,200 times 0.75. That means that your full commissions is only going to go up to $900. So that means that if you sell a $100 policy, you're going to earn $900. Okay. Now, this is usually how this works. If that client is paying month to month or annual, will determine the full percentage that you're going to receive on this $900. Okay. So we still got $900. We still got $900, right? What's going to happen is you're going to be in a situation to where some companies, what they will do is they will pay you only 9 months, okay? They're only going to pay you 9 months advance of this $900. So that's about 75%. They're only going to pay you 75. They're going to advance you 75% of that. Now, once it gets to month 9, they're going to release the other 25% at month 9 of them paying if they're doing a month to month. So now, if I wrote a $100 policy, okay, I do it times 12, That's $1,200. I'm in a 75% compensation rate. 75% compensation rate is going to leave me with $900. If I wrote that policy, they're going to advance me out of this $900. They're going to advance me 75%. So 75% of that $900. So 900 times 0.75%. Now that 75% has nothing to do with the 75% up here. Okay, the 75% is because it's 9 months. Now, not 75% of that 900 is $675. Okay, now after that 9 months is pretty much completed, now I'm in a situation to where I'm going to get the rest of that $225 when they pay again at that 9 months. Okay. Now let's say in a situation they started in January, right? We all know there's 12 months. You got January, February, March, April, May, June, July, August, September, October, November, December, right? Let's say that client pays $100, $100, $100, $100, $100, $100, right? Let's say they only paid for 6 months. And they say, you know, I can't afford this policy, I don't want to pay it no more, blah, 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 right? That's very, very stressful, okay? Let's say that they just don't pay they just stop paying at 6 months. Well, the company advanced you 9 months. The company advanced you 9 months. So what they're going to consider this is a chargeback, okay? They're going to consider this a chargeback. So what's going to happen is out of that $675 that they gave you up front, okay, which is usually about 9 months of that, they're going to charge you back. They're going to charge you back whatever percentage that you owe. Okay, can't do it off the top of my head, but they're going to charge you back whatever percentage that you owe on that. Okay, let's just say hypothetically, you got $900. They already gave you. Your full comp is going to be $900 out of 12 months. $900 times point, what is that, $900 divided by 12, that means you're making $75. They only paid 6 months, so that means that you get to keep $450, okay? You get to keep $450, but out of that $900, they're going to charge you back. They're going to charge you back $450. Okay, they're gonna charge you back $450. Now, if you didn't get the full, $900, don't worry about that. Now, they're only going. Now, if you're doing this, you're not gonna be in a situation where you have to pay the full $450 because you didn't get to the 9 months yet. But your chargeback is not going to be the full $450. It's only going to be a certain percentage of the $675. Okay, if that person stopped paying. So that means that your goal in the beginning is continuously right. Because people are going to cancel their policy, right? For whatever reason. Sometimes it's dumb, sometimes it's smart. Whatever reason possible, people are going to cancel their policy. But you want to make sure that you're in a situation where you're continuously writing over and over and over and over again, okay? Now, I'm going to explain, this is pretty much how the compensation works when you're selling a policy, okay? You can sell a policy for $100, $500, $1,000. There's some people that are putting $1,000 a month away into their insurance policy. So that means that's $12,000 a commission full. If you're doing 75%, that's $9,000 of commissions that you have, okay, on just that one client, okay? You just got to figure out what client is best for you, or how you're going to market, how you're going to promote to, clients that are able to pay that amount. Now, there are situations where people put way more than that, right? I know clients that are putting a ton of money into these policies. Now, I'm going to go over how it works when you're in a situation to where you're looking at building an organization, okay? You're looking to build an organization. Now, sometimes it doesn't work this way for some people, but for most agencies that I've seen, this is exactly how their comp plan works. 85, what am I at? 90%, 100, 105, 110. Remember I said it goes up to about 145. Okay, let's just skip the 145. Now, let's say hypothetically speaking, you're at 100%, all right? Starting off, you're at 100%. This is your compensation plan, meaning you're gonna get 100% per sale. Now remember, when I said if you're at 75%, right? Let's just say you got a person You got a person right here. This is one of your agents. Okay? They're at 75%. That agent is at 75%. So that means the override, okay, it's something called an override. The override that you're going to receive is going to be 25%. Okay? You're going to receive 25% of whatever they're making. Okay? Now, there's somebody above you, they're going to, let's just say your upline is at 45%. That means that they're going to make 45% of whatever they're making. Usually in sales, what happens is if you're selling something, you don't get advances, number one. And if you're selling something, you don't be in a situation to where you, like that, I'm not taking from this person, okay? In sales, usually if you get 75%, you make $100,000, I'm taking 25% of your 100,000. That's not how the insurance industry works. You're getting 100% of what you deserve and what you have. I'm not taking from this, okay? So the way that this works is this. If this client right here, this person right here, if they're in a situation to where they go out, okay? They go out, let's say that this agent, let's just say his name is John. John goes out and does $10,000. Okay? He earns $10,000, right? That's what, like after the 75%, that's how many policies he wrote, everything he took home. $10,000 went to his bank account, okay? From the commissions that he made. Now remember, you're at 100%. That means that you, on top of that, you're gonna get 25%. You're gonna get 25% of this $10,000. So that means that just from an override, by you just recruiting John, by you just setting John up, being his upline in this industry, adding him to your agency, adding him to your brokerage, you're going to receive a commissions of $2,500. Now, if you train them the right way, it's not going to be a problem. So that means that you're going to get $2,500. I'm not taking $10,000. I'm not taking $2,500 out of his $10,000. That's just the commissions that I earn. Now, whoever your upline is, this is you. Now, whoever your upline is, let's say, for example, they get a 45% spread on whatever you do. Even if John sells something, so every policy that you're selling, somebody above is getting something. Your goal is to get the highest percentage, meet the qualifications so you can get up there, so you can get, a certain percentage of everybody's stuff. So let's say that you at 45%, okay? Usually, sometimes you can go to 160, I apologize, right? Let's say that upline is getting up 45%. That means that now I'm gonna get 45% of this 10,000. So that means that now this upline, not you, but whoever your upline is, you might not even know them. They're gonna get 4,500 just by you being in his downline. And that's how every policy usually works when it comes down to getting overrides, okay? So it's very easy for you to scale in this industry when you build your organization out the right way, okay? Now, if this client gets a chargeback, of course, they're going to charge back that 4,500 to you. They're going to charge back this 2,500 to him. They're going to charge back that 10,000. All right? If they all charge back, but that's usually how that works. Now, it's not you necessarily doing the work. There's this quote by J. Paul Getty. He says, "I'd rather have 1% of 100 people's efforts than 100% of my own." When you're building out any type of organization, I don't care what you're selling. Okay? I don't care if it's tech sales. When you're building out any type of organization, usually you want to be in a situation where you're building out something to where you don't have to be the one working all the time. You build out an infrastructure to where this thing is paid out in a really, really good way. Now, if you're in a situation to where, this is usually how life insurance policies work. If you're in a situation where that client consistently pays on an ongoing basis, right? On an ongoing basis, you're gonna get paid something called renewals. Okay? Renewals is what happens after the 12 months. So after the 12 months, meaning month 13, month 14, month 15, like they can have this policy set up for 30 years. and you're going to get paid every single month after that first year on what they're actually, on a percentage of what they're actually paying. So let's say, for example, they might say, let's say, for example, your company might say, we're going to give you 4%, right? We're going to give you 4% we're going to give you 4% renewals. So that means that if I sell a $100 policy, and after the 12 months, that client is consistently paying, that means this month, month 13, I'm going to get an extra $4, extra $4, extra $4, every single month for the next 30 years, up until they die. I'm going to make an extra $4. Now, for you all, $4 may not be a lot, but $4 is a lot. Because if you're consistently growing your business, and you do this, let's just say over time, you sell 100, let's just say you do 1,000 policies. You do 1,000 policies for $100 times 4. We're talking about an extra $4,000 a month residually, okay? Residually. And that's the position that you want to put yourself in when you're talking about renewals. Now, another thing that you can sell in the life insurance industry is called an annuity, okay? Annuity. I know you guys have seen this on the on your test, right? If you're not selling them, right, I suggest you figure out how to get into it as fast as possible. Annuities is a very, very high commissions paid thing. Now, when you're dealing with annuities, you're dealing usually with people that have a lot of money just stored somewhere, right? They have a lot of money just sitting in the bank. They just sold their home. They're about to retire. They want to liquidate their 401k. They want to liquidate their IRA, their CDs, all types of stuff, right? So that means that lump sum of money that they've been storing up over a course of time, they want to put it into another vehicle, right? Which is called an annuity. I do another video on what that is. But usually, an annuity is going to pay out usually about 4 to 6%. Usually 4 to 6%. 4 to 6% of whatever is rolled over or whatever is put into the annuity, okay? So if you're talking about, you got a client that wants to put $1 million into an annuity, okay? $1 million into an annuity, you're gonna get, let's just say hypothetically, 6%. 6% of whatever that annuity is, right? Times whatever compensation rate that you're at. Let's just say that you're at 100%, okay? Remember, it's still based on the comp rate too. Okay, let's say you're at 100%. That means you're going to get 100% of that 6%. If you're at 75%, that means you're going to make 75% of that 6%. Okay, if you're at 55%, that means you're going to make 55% of that 6%. Let's just say right now, today, you're at 100% to make this thing a little bit simple. Okay, 6% of that $1 million that was rolled over or put into an annuity is $60,000 commission. Okay. $60,000 commission. Now you can get paid up front. Okay, you can get paid up front, or there are some cases where you can get paid quarterly, right? Where you get paid quarterly. So quarter 1, quarter 2, quarter 3, quarter 4, okay, for the rest of your life. For most cases, the upfront, if that client is consistently paying, you just want the upfront $60,000, or you can get it broken down every single month. Now, usually every single quarter. So usually when you're talking about an annuity at $1 million, they're going to pay you usually about 2%. Okay, 2% advance. Okay, they'll pay you 2% advance if you don't receive the upfront money. Okay, on that annuity, they'll pay you 2% advance, or every quarter they'll pay you usually a 0.03%. Okay, so 0.03%. Let me see. It's either 0.003% or 3%. Let me see something. So that means quarterly 0.003%. Yeah. So that means that you'll make $3,000. 0.003%. Okay. 0.003% of that annuity. That means that you would make $3,000 on a quarterly basis on this policy. Sometimes it's annual, sometimes it's quarterly. It just depends. So that means that they've already paid. Okay, so there's no chargebacks or anything like that. Now the only way that this quarterly would stop is if they died, right? If they died, because they had already gave all that $1 million to the insurance company for them to get that. Now the same thing. Let's just say I'm at 145% comp plan, okay, and I get a 45% override on this in the agency. Same thing. If I get 65%, okay, if I get 60,000, if that person, if I just did 60,000, my upline is going to receive 45% of that, okay? So that means that I just received $27,000, right? Just by putting this person in position to win, all right? Now, there's so many different other types of policies that you can sell. You can sell policies to banks. You can sell policies to institutions. You can sell group policies, group plans. There are different ways for you to get paid in this industry. Those are some of the two basic ways to get paid. I've seen people get paid $4 million up front on certain policies. I've seen people build their business out to where they got about $1 million annuities. $1 million override, not overrides, $1 million renewals, $1 million every single month in renewals, $8 million in renewals. So there are people that are literally being in a situation where they're selling to these huge institutions and they're making a huge percentage. So there are people out here that are buying, they're putting $1 million towards their policy every single year. Or you got people that are putting $10 million, $20 million towards their policy every single year. You just need to figure out how to attract those types of people. So I hope this video pretty much helped you out and helped you understood exactly how the insurance industry is one of the best industries out. If you're trying to build an organization, if you're trying to build a team, I just did it with one person, okay? Some of you guys out there, you got thousands and thousands of people that you need to expose your business to, and especially in this economy, people need more money. People need to know exactly how to build out their business. So this is exactly how this industry works. You can send this out to as many people as you want. If this helped you, go ahead and comment. If you like this video, go ahead and like this video, subscribe, do whatever you got to do to make sure you're connected with me, because you're going to know exactly who I am just in the next few years, right? And again, yes, I am 22 years old, so I understand this stuff very, 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 very complex information, but it's very, very simple once you go ahead and you get into it. Now, if you're looking for a home, and you want to be able to do business with our organization, we don't lie, we don't do all that extra stuff. We get straight to the point, and we make sure that you understand how to build this thing out and how to be in a situation to where if you want to build, if you can build. If you want to sell the policy. We don't care. Just go out here and be successful and be the best version of yourself and live through the gift of God that has been presented to you. So my name is Keon, my name is Keylot, and I want you guys to be blessed, and let's get it. Oh,